It's Sunday evening, May 2nd, and I'm going to do my market analysis, try and get myself set up for this week. We'll see if we can find a pick. Let's start off with Friday's pick. Take a look, see how it fared. OCGN was the pick of the day for day trading, and the video was recorded right about in this area here, about 2 hours into the open. You can see stock continued to move higher, but then eventually gave back some of those profits. It did close right about where I had suggested getting in, or at least when the video was recorded. Take a look at the daily chart. I still like it. The fact that it's been able to hold all of these gains and compress here tells me that the stock is ready to lift off. Really nice volume. I'm mainly day trading right now because I don't like the market. I don't like the setup here. And I think for swing trades, you're in kind of a dangerous position where tech stocks have reported. We're seeing very light volume during the day. You can see doji, 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 doji. That means that there's a lot of equilibrium. The market has a tendency to close where it opens. Buyers and sellers are paired off. After last week's news, you would have thought, wow, we are going to take off and never look back. We had a dovish FOMC statement. We had earnings from Amazon, Facebook, Apple, Google, all off the charts strong, stocks with strong reactions after the number. Microsoft was the only one out of the big five tech names that had a little bit of a pullback, but its numbers were also very good. So why isn't the market going up? Well, we've had an 8% run off of the low from just a month ago. So that good news is priced in. Now, this week we are going to get a lot of economic news. We're going to get ISM manufacturing, ISM services, ADP employment, the unemployment report on Friday. So lots of economic news. And the bonus is that we do not have to worry about Fed tightening. Really good dovish FOMC statement last week. They said that they're not going to be tightening anytime soon. As these good economic numbers come out, that should give the market a tailwind. But if we just can't see any liftoff with excellent news, it tells me that the market's tired. It's compressing. It's probably going to go sideways for a while. We could even see a little bit of profit taking. I am waiting for that dip to get in on some swing trades. So I'll show you a couple of trades tonight. We'll take a look at them, but I'm pretty neutral in here. I'm just as willing to sell out of the money call spreads on stocks that are very weak as I am to sell out of the money bullish put spreads very short term while the market figures out what it's going to do. Ultimately, though, you want to be almost sidelined as far as your swing trades. We're just not going anywhere. It's not worth the risk. Option implied volatilities are super slim. So as far as selling strategies, just not a lot of premium. You're taking on a lot of risk. One little market whiff, your positions are going to be in a problem. I think that the best thing you can do is keep your powder dry, wait for that pullback, and then start to sell them. And I'm not looking for a big pullback. I think if we get down to 405, that move is going to be very short, very brief. It may only last 2 days. Well, why do I say that? If you look at every sell-off that we've had, it's been just a couple of days, and those little dips have instantly been bought up. There you get one day, a pause, another day. That's about as good as you're going to see. This is one of the bigger sell-offs we had. 2 days in a row, pause, 3 days down. This is the biggest market decline we've had this year. And then boom, right back up. Little pullbacks like this provide us with incredible opportunities because they help us identify relative strength. So in addition to getting in at a better price, they also reveal which stocks want to move higher. So I'm going to go through a list. It's Pop Bear on Option Stalker, and I'm going to click through some of the different charts here. We'll see what we can find, see if there's anything that sticks out. I'll be looking for an out of the money bullish bearish call spread that I can sell. This wouldn't be too bad trying to sell at the high, but you're not going to get any premium for that. And I'm just going to, actually, I'm going to go run a search. I think that'll probably be even better. I'm going to put a custom search and I'm going to use our new trade variable. I'm going to look for a new bearish trade signal on a daily basis. and I'm going to look for decent option liquidity and heavy volume on Friday. And this is the list that we've got. Let's take a look at some of these charts. I'll move this off to the side. CIEN. This is not a bad looking chart for a short. You can short up to the 100-day moving average, but you need a little bit of a bounce. You can see how easily it blew through the 100-day moving average and now is testing the 200-day moving average. On any little rally, I think shorting around that $53 strike price would be good. Selling it out of the money 53, 54 bullish put spread. Excuse me. So used to saying bullish put spread. Selling an out of the money bearish call spread and selling that for a 20-cent credit, that would be a good trade. So again, selling to 53 calls, buying to 54 calls, doing it for a 20-cent credit. That's a pretty decent looking trade. I'm going to continue to go down, take a look at eBay. eBay really fell hard after that earnings announcement. This could be a nice bearish call spread above that 100-day moving average. That doesn't look too bad either. Keying off of that 58 level, you're close to the money, so you're not going to have a lot of cushion. But after a drop like that and follow through, there's a good chance that that stock is going to have a difficult time getting through that $58 price point. So let's bring up the $58 calls. Let's go out at least a couple of weeks, and we'll see what we can get for those. Like a 58, 59. So sell the 58s, buy the 59s. I'd need to get a 20-cent credit for that at 17 cents bid, offered at 23. Only 2 weeks till expiration. That might not be too bad. I think that you're going to see continued selling pressure on eBay given that it fell right through these major moving averages and it's already testing the 200-day moving average. So that might be a consideration. That was a nice breakdown on EGO. Just going to continue to go down and see what else might look good in here. GILD, right around that 100-day moving average. Twitter actually announced on Friday. That's a pretty big breakdown as well. I think that Twitter is going to hold that 100-day moving average because that's also horizontal support, now horizontal resistance right around that $62 level. So let's bring up the option chain for Twitter. That might be another consideration for a bearish call spread. And we'll go a couple weeks out on this, so May 21st expiration. And let's go to the 62 strike. And let's click on that bid. And let's go to the 63s. So we would be selling the $62 calls, buying the $63 calls, and you can see it's 1 penny bid offered at 20 cents. I'd need to get a 20-cent credit for this. I think that could also be a decent trade. And let's take a look as well at what the market is doing overnight. We've got the S&P futures up about 11 points right now, so we should see a positive open. Let's go back to that SPY chart one more time. And you can see all of these dojis in here, very, very tight trading ranges, very light volume. So buyers are not very aggressive here. We could get a nice little pop, and we have end of month, beginning of the month fund buying. So that should set a nice tone for Monday. On that market rally, we might be able to see Twitter try and bounce and make up some of those losses that it took on Friday. And as it does so, we might have a chance to sell that 62, 63 bearish call spread 2 weeks out for a 20-cent credit. I really like that trade. That's going to be my highlighted trade today. Keep your swing trades to a minimum. This is a low probability trading environment. When prices are compressing like this, it means we're going to get a breakout. Which way? Could be up, could be down. If it's down and you've got a bunch of bullish positions on, you're really going to be beating yourself up because you would have been able to get into those positions at much better prices. And if the drop turns out to be something more than just a brief dip, you're going to have to worry about possibly taking your losses on those positions and exiting. So keep your powder dry. There's no rush to get into this market. You saw that this week. If you turned on your computer screen Wednesday morning and you saw this gigantic pop here, you thought, that's it. We're going to the moon now. We've got everything in place. Fantastic tech earnings and FOMC, blah, blah, blah. Add it all up. Oh my gosh. Doesn't get any better. What does the market do? Pulls back. So you do not have to chase up here. Every time the market has rallied, we've seen a little bit of profit taking. Every time. So I think we're due for a little bit of profit taking after a big run like this. Let's do one more thing. Let's go in and we'll take a look at a bullish search, see if we can find something on that side of the ledger. And I'm going to use the same search variable. We'll go and use trading signal new. So this means it's just been generated in the last couple of days and heavy volume today. So these might be nice candidates on the long side. And I'm going to move this off to the side and we'll take a look and see some of these. They're probably going to be decent looking charts. That's beautiful breakout right there. I don't want to chase. Selling a bullish put spread below 240 on any kind of market pullback. Make sure that the halfway point of this long green candle is preserved around that 246 level. That would be nice. Take a look at BL. That's a nice breakout. COF, a little bit too far out of the gate, but has a nice head of steam. ESI is a really nice breakout. I like that with the follow through right in here. ESI looks really good. Excellent volume too. So there are a couple of really nice stocks that you could consider trading right there. That AON breakout, selling that bullish put spread, I think that works, but I'm not sure about the option liquidity. ESI looks really good. Facebook pulled back a little bit. You can see how it's going to be testing that open. I loved the pop. I love the big rally that we saw on heavy volume. It may come down and test that 315 breakout. And if it does, you want to see it bounce and hold and then start to float higher. If it does that, then selling an out of the money bullish put spread keying off that 315 strike price would be the way to go. So those are some trade ideas for tomorrow. I feel that the market is going to make a move lower, not dramatically, a little bit of profit taking. Some of the air is let out of the balloon. We'll see. And I think it's a warning sign if the market cannot get off the deck this week with great economic news and no Fed tightening. So let's see what happens this week. Keep it light. Let's see how things play out. You do not need to chase. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.